I'm always analyzing my thinking, especially on this AI narrative. I felt that the risks outweighed the benefits of being long, especially in these things, and time to take some profit. There wasn't the same asymmetry there in terms of the awareness of the potential of things like near and hype. On the ZCash front, there's a bit of a different issue. The way I view things, if I think that there is a risk of like pretty much a complete wipeout in my capital due to some technical issue, I can't in good conscience keep my capital in that particular situation. Obviously, the ZCash team is fixing this issue, adding formal verification. When the new shielded pool launches, hopefully this thing will be fixed and I can evaluate then and see if I want to come back in.
Arthur Hayes has spent the last several months making some of the most profitable calls in crypto. He was aggressively bullish on Hyperliquid. He was bullish on Near. He was bullish on ZCash, and while much of the market was celebrating those gains and expecting even higher prices, Hayes quietly started heading for the exit. In a recent interview, the former BitMEX CEO revealed that he has sold his positions in Hyperliquid, Near, and completely exited ZCash. In some cases, the trades had already delivered massive returns. In others, like ZCash, the decision was driven by risk management after concerns emerged surrounding a serious technical vulnerability. Hayes made it clear that if there's even a possibility of a catastrophic loss of capital, he refuses to stay exposed while waiting for answers. For an investor known for taking big bets, that's a remarkably defensive stance. But what makes this story far bigger than a few token sales is the reason behind them. Hayes believes a much larger force is beginning to dominate global markets. While crypto investors continue expecting Bitcoin, Ethereum, and altcoins to absorb trillions of dollars of newly printed money, Hayes argues that another sector is attracting nearly all of that capital: artificial intelligence. And if he's right, the consequences could be devastating for crypto valuations. In fact, Hayes warns that if upcoming artificial intelligence-related IPOs continue to explode higher, and the artificial intelligence narrative keeps strengthening, many crypto investors may be completely underestimating how much pain could still lie ahead. Today we're breaking down why Arthur Hayes sold some of his most successful crypto positions, why he's becoming increasingly cautious despite remaining bullish on Bitcoin, and why he believes artificial intelligence could continue stealing capital away from crypto markets for much longer than most investors expect. We'll also examine his surprising outlook for Ethereum, his warnings about energy prices, and the conditions that could trigger the next major move across digital assets. Before we dive in, make sure to like this video, subscribe to the channel, and turn on post notifications so you never miss our latest updates on Bitcoin, crypto, artificial intelligence, and the global macro trends driving markets. Let's get into it. Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time.
What did you see in the AI trade that caused you some jitters?
So obviously we have the SpaceX IPO. It's done very well in the first 2 trading days, but that's a low float, high FTV shitcoin, in my opinion. And we know how those go when you start having unlocks. And we start having unlocks in September. We have Anthropic and OpenAI coming to market as well. And also we have this Iran war energy situation. If you believe the authorities, they say it's supposed to be fixed. And then I guess read some headlines this morning that Israel says we're going to keep bombing Lebanon, and supposedly Iran cares about Lebanon. We don't know. So that's like a whole thing. We'll see if this thing actually materializes anything. But at the end of the day, we have this underlying bid for physical commodities that isn't going away. And so there could be a situation where we wake up in 3-4 months' time and oil is at $120, but the strait is supposedly open. And what do you do then? Essentially, energy is the input for our entire civilization, including the AI, because AI is just transforming energy into intelligence the most efficient way possible. So, all these things were weighing in my mind. Like, okay, I think the summer is going to be sort of a topping period for a lot of the markets. I've done really well on these calls. Let me just take the W and go chill. And, if I need to buy back in other things, and let me find some asymmetry in other places, right? Like I got into hype in the high 20s, low 30s. It's now whatever they got out at like
70
in the mid 70s, right? That's a decent trade, right? I think to go from the 60 to the 150, my original call, not that it's going to be impossible. I think it will happen at some point, but it's going to be a harder slog than the first part of this run. And so, okay, as an investor, at least in how I view things, is I want to find those asymmetric trades where I can deploy a little amount of capital and get a big return. And then I could put the rest in sort of low income yielding, bond-like structures or Bitcoin.
So how are you positioned right now? Are you in cash looking at opportunities, trying to find the opportunities? How are you positioned?
So obviously very long Bitcoin as always. I'm perennially long Bitcoin. Got a lot of cash.
When you sell these tokens like Sell, Hype, and Near and ZCash, which I would imagine are shorter term positions than Bitcoin otherwise would be, do you sell into Bitcoin?
Depends. So I haven't this time. I'm just sitting in a lot of T-bills, just earning some yield. And, if I'm able to find some asymmetric opportunities before I really check out for summer vacation, then I'll do that. Otherwise, I'll just be compound my rates at whatever, 3.5%. Like not exciting. Obviously there's a big bull market going on, but thankfully on a decently large capital base, it doesn't really matter. To me, I more care about my mental sanity. Well, obviously there was a great trade conceptually, at least back in the day when I really went long ETH back in when it was trading $100 to $200, which was there was some chart that was going around about the value of all applications on top of Ethereum were worth more than Ethereum. There's either one Ethereum is undervalued or two, the applications are overvalued. And we were in this sort of a pseudo bull market at the time. So let me just go long ETH. So I just back the truck up into ETH and 20x, right? Or 10x, whatever it was. So
that was in 2020 to 2021?
Yeah, around that time period.
That era?
So that era. And so, speaking of ETH, I think ETH has one of probably the cleanest setups for something that could really rally off of, a very big, safe, crypto safe, market cap, right? Like Ethereum has a lot of issues, but it ain't going to zero overnight. At least I don't think so, right? Actually, it could, but the risk of ETH going to zero overnight is much less than Hype or any of these other tokens. Not that I don't love Hyperliquid or some of these other projects, but it has a certain Lindy effect and a certain largeness and stickiness that I could just deploy a lot of capital into ETH and turn my phone off for a year and a half and be happy about that. I would not do that in the same notional with anything else in the ecosystem other than probably Bitcoin. So I think that's probably one of the best setups I see out there for a mega cap coin because, ETH is trading well below its 2022 all-time high of 5,000, whereas pretty much every other token of value that has existed at that time period, a major, at least broke through that. Bitcoin did, Solana did, pick your, bigger cap Dino coin, and it got through those levels. It might not be trading there now, but at least it got there. ETH hasn't even gotten to that point yet. So I think if ETH starts to move, people are really going to jump on that train because they so badly want ETH to just why isn't ETH at 15,000 or some level, right? And there's obviously structural reasons why it's not, but people would love to believe that it could get there.
What stands out most about Hayes' comments is that he isn't abandoning crypto. Far from it. He remains heavily invested in Bitcoin and continues to believe many of the projects he sold could eventually move higher. His concern is timing. The easy money may have already been made in some of these trades, while a growing number of macro risks are beginning to appear on the horizon: rising energy prices, geopolitical instability, and increasingly crowded positioning around the artificial intelligence narrative are all forcing him to think differently about risk versus reward. And that leads directly into what may be the most controversial part of Hayes' entire thesis. While many crypto investors continue waiting for massive liquidity-driven rallies, Hayes believes artificial intelligence has become the dominant destination for global capital. According to him, understanding where newly created money is flowing may explain why Bitcoin and many altcoins have struggled to deliver the explosive returns that investors expected from this cycle. In his view, the battle for capital isn't just happening within crypto anymore. Crypto is now competing against the biggest technology investment boom the world has seen in decades.
What catalyst brings them higher? If the incremental unit of fiat is going to fund CapEx or going to some bank that's going to lend to AI companies, where's the capital that's going to be available to push Bitcoin to 200,000 or ETH to 10 or 15,000?
Yeah.
Like they may rally a bit, but I think this is the reason why people are so disappointed. It's like, okay, yeah, Bitcoin took out its all-time high. It was, from 69 to 125. So like, it doubled from the all-time high. That's probably one of the most shitty bull markets
It
ever.
sucks.
for crypto.
Yes.
Why?
No one was
Because
thrilled.
AI took all the money.
Yeah.
We printed a lot of money globally. And what happened? All that capital was funneled into AI. The only thing that investors want to allocate to is AI, whether that's on the debt or the equity side. And I don't see that changing if this AI story continues to be the only theme that you're investing in, especially if AI can survive higher oil prices. You're definitely going to be, oh, wow, AI survive. It's oil's at $150 and the Nasdaq's at 40,000. Then energy doesn't matter. It's all about AI. Nasdaq 100,000, right? And so I think, yeah, Bitcoin could rise because it's, a shittier version of a tech stock, but it's not going to be that explosive rally that you expect given the trillions of dollars and euros and yen and yuan that had been printed. And so that is why I think investors are still going to choose AI as the fastest horse to sort of exchange a infinitely debased fiat unit of fiat for some financial asset that will outperform the debasement.
In order for crypto to kind of just have the vitality and energy and the funness that we once had in the markets, do you think like AI needs to just stop sucking all the oxygen out of the room?
Yeah, essentially. Yeah. I don't see why. I don't see how on a broad sense you can get Bitcoin at 500,000 with this AI story in play. Because again, okay, that if Bitcoin went to 500,000, let's call that a 10x return, right? Was it SanDisk did 50x this year or something crazy?
Something
SK
crazy,
Hynix went up 10x.
Yeah.
Right. So like you could find some second or third derivative down from some component that's necessary for data center build out, put your entire net worth into that, and you could be 20x in 6 months. Why would you buy Bitcoin? I think that's how you have to think about this. It's always an opportunity cost. Yeah. Again, it's all the same trade. Everyone knows that this unit of fiat will be worth less in the future. What can I buy now that's going to outperform that? And I want the fastest horse. AI is the fastest horse and has proven itself to be the fastest horse. And therefore, an investor with this marginal unit of fiat is going to continue to choose AI, especially if SpaceX at 180, Anthropic does well, OpenAI does well, the oil price goes up, and the rally in the party continues. It's only going to make it harder for some of these cryptos to do extremely well. They could still do okay, but then you're like, oh, I made 50% on my crypto, but like this other tech stock was up 20x. I messed up.
What are you looking at? What indicators are you looking at to kind of like measure how much time left we have in this, in the AI trade, in the AI bubble? Is that how you think of it?
Yeah, so I see that this is a bubble. We are either in the late stage or the early stage of a bubble, whatever, right? So when I put my hat on as a trader, I'm like, okay, I got to think about the exit from this thing. I fundamentally believe that humans are always over-optimistic at the beginning of any technological build-out. I believe that this could be bigger than the railroads in terms of percentage built. Okay, what happened with the railroad build-out, right? You had two financial crises in sort of the mid to late 19th century, 1873 and 1893, basically predicated on credit driven to railroads and sort of an over indexing about the return that these things could generate. So, I think that this could be the first little test, maybe this summer, we'll see. And then, you rally off of that and we're still believing the hype in terms of what AI can deliver. I think, you read Michael Burry and a lot of these guys about what's wrong with this situation. It's all these circular revenue deals. It's that, Google invests in a lab, or NVIDIA invests in the lab takes an investment and buys the chips. Right. Google is underwriting the credit of the data center that is going to provide them the compute, right? So it's all just circular accounting. The depreciation is pushed off in the future, right? You're taking a chip that depreciates every 2 years, pretty much, which we've seen over time, but you're giving it a 6-year life or 5 or 6 year life. That doesn't make any sense. to amortize a loan based on that. You're saying that this capex will continue indefinitely, even though you have Chinese competitors with models that are good enough charging 1% of the price. And so I think a lot of investors have sort of bought into the America of, is it the biggest badass country, best tech, da 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 da. It's the same fallacy you thought about cars, right? Do you get if you drive a Ford or a BYD? Give me the BYD. It's cheaper, right? It's just as good, if not better. So I think people have bought into the brand of the USA, but they forget that like the brand value erodes when a customer is faced with a product that's good enough and 1% of the price, which is what, a DeepSeek or Kimi model can deliver. And so I think these are some of the things that it's eventually the market will recognize. I don't know when that is. And then they'll say, okay, I don't believe that I should be paying this multiple for this company. Or the executives at these hyperscalers say, I don't believe I'm earning the return I need to earn. I need to scale back my capex projections. And that's when the whole edifice starts to break.
Arthur Hayes' message isn't necessarily bearish on Bitcoin. In fact, he remains one of Bitcoin's most committed long-term bulls. What he's questioning is something different, whether crypto can continue attracting the same level of speculative capital, while artificial intelligence remains the most exciting story in global markets. If investors believe they can potentially generate 10x, 20x, or even larger returns through artificial intelligence-related opportunities, crypto may struggle to capture the attention and liquidity that fueled previous cycles. At the same time, Hayes sees opportunities where others see disappointment. His comments on Ethereum are particularly noteworthy. Despite years of criticism surrounding the network, Hayes believes Ethereum may actually have one of the strongest setups among large-cap cryptocurrencies because it remains well below previous cycle highs while much of the market has already revisited or exceeded those levels. If sentiment shifts, Ethereum could become one of the biggest beneficiaries of renewed investor enthusiasm. The bigger takeaway is that Hayes is approaching this market as a trader rather than a believer. He isn't marrying narratives. He's constantly evaluating opportunity cost, searching for asymmetric opportunities, and asking where capital is most likely to generate the highest returns. That's why he was willing to lock in profits on successful crypto positions and sit comfortably in treasury bills while waiting for better opportunities. Sometimes preserving capital is just as important as growing it. Whether you agree with Arthur Hayes or not, his analysis raises an important question for every investor watching today. Is artificial intelligence creating the biggest bubble of our generation, or is it genuinely becoming the fastest horse in the race for global capital? And if artificial intelligence continues winning that competition, what does that mean for Bitcoin, Ethereum, and the broader crypto market over the next few years? Let us know your thoughts down in the comments below. Do you agree with Arthur Hayes that artificial intelligence is absorbing capital that would otherwise flow into crypto, or do you think Bitcoin and Ethereum are still preparing for their biggest move yet? If you enjoyed this video, don't forget to like, subscribe, and turn on post notifications so you never miss our latest coverage of Bitcoin, crypto markets, macroeconomics, and the biggest investment trends shaping the future. Thanks for watching, and we'll see you in the next video.